So today is going to be all about the basics of Forex. Now, if you're a beginner, this is the video for you. If you're more experienced, then this might be a good refresher for you, alright? Three main things today: the what, the when, and the who. Now, what is the Forex market? Basically, it is the largest financial market in the world, trading at about $5 trillion approximately, because it was trading at about 5.3 trillion in 2013. Then after that, it dropped all the way to about $5.1 trillion in 2014. So that's a massive drop in volume. So if you really think about $5 trillion, it is a very liquid market. Okay, so a lot of people like to say that Forex market has a very high liquidity. Alright, what does it mean by liquidity? It refers to the amount of volume that is being traded in the market, the amount of traders that is trading in the market. So what does this mean for you? It means that the more liquid the market is, the more predictable it is. So you want to put your money into a market that is as predictable as possible. And Forex market is one of those people, because you can't have somebody with very deep pockets. They can't manipulate or rig the market, okay? To put it simply, just trade a market that is very liquid so that you can protect your hard-earned money. The Forex market, if you are to combine the futures market and the equities market volume together, it is still smaller than the Forex market's volume. So it's pretty significant. So basically, the term Forex is actually the short form of foreign exchange. Now here's the thing, does this sound familiar to you? Because when you go and travel, right, you realize that we are all Forex traders in a sense, because you need to change from, let's say, US dollar to Australian dollar when you travel to Australia. We all have been Forex traders in some part of our lives. Unless you are a boring person, you don't travel, then I'm really sorry for you. So majority of this volume would come from the US dollar. Okay, most people are trading the US dollar for many different reasons, followed by euro dollar. If you want to trade currency pairs that are more predictable, in other words, you should start with the more liquid pairs, which in a way, I'm so sorry about that, which in a way is trading the US dollar pairs. Any pairs with US dollar would provide you with the liquidity that you need. So if you really want to start trading, you should pick the more liquid pairs. Okay, I'm going to talk about more on this in the next video, okay? When the market is very liquid, it's very easy for you to open and close a trade. As compared to the stock market, with a very low liquidity, a lot of people find it very hard to go in and get out of their trade. Not only Forex, but also the property market. If there's not enough sellers, then you're not going to get somebody who is going to pay you for your property. So some people call the foreign exchange market the currency exchange market. You know, I think my handwriting improved recently. Also, people call it the FX market. Okay, FX market. Now, I'm not talking about the K-pop group. Okay, now that you know a little bit about what the Forex market is all about, here's the thing: who trades the Forex market? We represent the retail traders. Alright, and then of course you have, why is my microphone dropping onto the floor? And then of course you have your corporations who trade markets. You have your banks, not bunks, banks. And then you would have your institutional traders. Now, over a few years of interacting with institutional traders and former institutional traders, a lot of people ask me, Karen, is it very hard for us retail traders to profit from the markets? These guys right here, they have more sophisticated machines, whereas we retail traders, we have very limited software and all that. Does this mean that they can profit and we can't profit? The answer is we can still profit as retail traders. And in fact, there are some institutional traders who tell me some retail traders can even trade better than institutional traders. Because here's the thing, some of the traders working in institutions, they have a conflict of interest. Some of them are forced to trade when they're not supposed to make a trade, just because it is their job as a trader to trade. You already know that when you force a trade, a lot of bad things is going to happen, okay? I'm not talking about that. You can watch the trading psychology videos that I have for you, okay? So the ones that are providing the most amount of volume for us traders are the institutional traders, the corporations and banks. So then, where is Forex trading traded? Forex trading is traded in an OTC market. What does this mean by an OTC market? It is an over the counter market. Okay, over the counter market. In other words, it is a decentralized market. Now, what are all these buzzwords, all these terms all about? Now my handwriting is getting worse and worse. And decentralized market, what does it mean? So you have the famous exchanges, New York Stock Exchange, and then you have Nasdaq, London Stock Exchange. Okay, that's a physical place where you can go to trade, especially if you're a futures trader, equity stocks trader. Whereas for Forex market, there's no centralized exchange for it. Everything is done electronically online through a dealer. Okay, so this is the basic foundation of what you need to know as a Forex trader. So in the part 2, I'm going to talk about how do you profit from the Forex market? Why should you not trade Forex? I mean, why should you trade Forex? And why should you stop listening to me also if you're here for get rich quick? When is Forex trading done? And of course, once you're done with these 3 parts, then I will go deep into detail. Alright, so with that, this is a brief beginner's guide on Forex trading, and hopefully that you like it. Share with me in the comment sections on what is it that made you start trading Forex and what do you like about Forex trading. Talk to you in the next episode. Bye.